The Pareto principle, also known as the 80-20 rule, states that 80% of the results are attributable to 20% of the causes. This principle simply allows us to focus our efforts on 20% of the items that are important, knowing that the other 80% are not. For example, you can concentrate on 20% of the products in your portfolio that contribute to 80% of your revenue. This principle was developed by economist Wilfredo Pareto and popularized by 20th century quality guru Joseph Juran. Surprisingly, this principle is relevant even today to most situations we come across in our daily life. For example, 80% of the money you make from your investments come from 20% of the schemes or funds in your portfolio. In fact, Pareto is one of the most widely used decision-making tool in today's business world. For example, if you want to improve sales conversion, you can identify 20% of the reasons that contribute to lost sale and focus your efforts there. Or, if you want to improve the return on investment on various marketing campaigns run by your organization, you can focus on 20% of the campaigns that generate 80% of the leads. Or simply, if you want to optimize cost, you can select 20% of the expense categories that contribute to 80% of the total cost by value. If you want to improve customer experience, you can identify 20% of complaint types which contribute to 80% of complaints by volume, and thus become a major cause of concern for customer dissatisfaction. In fact, as a manager, you will agree that 80% of all human resources problems are caused by 20% of employees. Remember that 80-20 rule is only a rule of thumb, which means that 80% can be 60 or 90%, and similarly 20% can be 10 or 30. All you have to remember is that contribution is not equal across all categories, and that is a law of nature. To summarize, you can say that 80% of any effect is a result of 20% of the causes.